I have Darren Farwell with me of the Farwell Group. And last Saturday, we talked about how we could find a financial advisor and assess him. And today you've promised to help us with something that I've had calls about, actually, which is how to understand the impact of the stock market on our investments. People lose sleep over this up and down seesaw effect of the stock market. So good morning, and I look forward to learning from you today.
Well, good morning, Marilyn. It certainly has been with the coronavirus and all sorts of things going on that people have been talking about how the market's been so up and down. Well, here's what I've been thinking about this week. I was thinking about how can our listeners, including, of course, all of the widows out there, how can you sleep easy at night with your savings invested in the stock market to support your lifestyle over the long term by keeping you ahead of inflation and taxes? How can you have your money invested in the stock market without having to worry about the stock market? Because as one of my favorites, Alfred E. Newman from Mad Magazine used to famously say, why worry? I hear a lot of comments these days about how the stock market is so volatile, the political situation, technology moving so quickly, the environment, and the comment, of course, that it's different this time. Well, okay, there are differences, the speed of information, the volume of information, the globalization. Yes, those things are different. But here's what's not different at all. The stock market goes up and down. Always has. And I suspect as long as we have a stock market, it always will. It's unpredictable in the short term, but goes predictably higher in the long term. The secret to successful long-term investing is to invest so that what the stock market does day to day, month to month, yes, even year to year, doesn't really matter. And you can. I'll give you 5 tips as to how to do that. But first, Wendy's going to make it clear why this is so important. Her husband died 3 years ago. The portfolio that her husband had put in place, because this was an anticipated event that was going to happen, so he had set up the portfolio knowing what was going to come down. But during the period September 2018 to December 2018, the stock market was down a lot. Wendy became very uncomfortable about what she saw month to month when he saw her statements, and at the same time was feeling very uncomfortable about speaking to her husband's advisor, because whenever she talked to him, he would ask her to make decisions about investments and decisions about planning for which she had no ability to make the decision, and it made her really lose confidence and not feel good about herself. So she just didn't want to do that. The net result was she got scared when she saw the news headlines, reading the newspaper, friends were worried. So what she did was she literally sold everything and went to cash and GICs. Now, cash and GICs are safe, and there's a place for them in people's portfolios, but she sold everything, including very good quality investments, to do that. But what Wendy found, of course, is that she needed some of that money through the year to live on. And as she took that money out, her capital went down. Ultimately, what happened is Wendy began to lose sleep not because of the stock market, but because she was worried. If her savings didn't make money for her and she kept using the money to live, she might run out. And that was even more scary for her than the stock market. Then her friend, who's a client of mine, told Wendy, this friend who's my client, that she had made 12.5% in 2019 at moderate risk. It was a very good year last year for stocks and bonds. That was enough in real dollars to cover all of her expenses that she needed over and above income she was getting and not have to use any of her capital. Wendy realized she needed a better plan. So together, with the specialized tools and resources we have for widows and others going through significant life transition, we created a personalized plan for Wendy. We spoke a lot about back and forth about risks, her sleep at night factors, and I reviewed with Wendy the 5 tips for investing so you won't have to worry about the stock market. Number 1, just decide not to sell good quality assets in a bad time. And what I mean by that, for example, is if you have a good quality Canadian bank stock, Just because it goes down in price because the stock market goes down, don't sell it at a bad time. Just like you wouldn't sell your house if your house went down in value, don't sell a good quality stock. Now, that doesn't mean don't ever sell. You can sell at a good time. Just don't sell at a bad time. Decide not to sell at a bad time. Number 2, always keep enough short-term funds to provide the income and extraordinary expenses that you're going to need in the short term. Many people keep 1, 2, or 3 years of income needs on the sidelines in cash. That way, if the stock market goes down, they don't have to worry about selling assets at a bad time to get the money they need. It's sitting there in cash. But recognize they didn't put all of the money in cash, just what they might need for the next couple of years. Number 3, always have a nice cash in the bank cushion. Research has proven that people feel a little desperate if the cash they have in the bank at hand goes below what for themselves is a personal threshold of comfort. That feeling of not having enough money can cause you to do things like sell good quality assets at a bad time to get that cushion back up. So make sure you have cash in the bank. Number 4, own investments that make money but aren't correlated to the stock market. These are called alternative strategy investments. They can earn 4 to 8%. They make money, but when the stock market goes down, they don't. Number 5, when things get bad, when the stock market does go down, and one day it probably will, don't pick at the scab. Don't generate your own stress by going online every day and seeing that it's lower. Don't even look at your account statements every month to see that they're going lower. That creates stress, and that stress that you're creating is only one way to relieve it, which is to sell the thing that's causing the stress, and that would likely mean selling at a bad time. So those are 5 tips for making sure that you don't need to worry about the stock market, whatever it does, in the short term. You can sleep soundly knowing that you're fully prepared whether the stock market goes up or down.
Well, I like that 12.5% that you helped your friend make. That's considerably more than putting your money into a note at the bank or just leaving it on deposit. I think it's 1.something%. So congratulations for your clients. Now, if someone wants to talk to you about the fact they're losing sleep at night and they don't want to, it sounds like every strategy is going to be different. Everybody is different. I've learned that from you week to week. Are you going to work today?
I am going to work. Still cold, not spring yet, Marilyn, so I'll be going into the office right after the show.
Okay, so then I'm going to give out your number, 416-863-7501. The Darren Farwell, part of the Farwell Group. It's a team that helps you look at what you've got and find a way to navigate so you can sleep at night. So if you're having problems and you're wondering what you should be doing, then get a second opinion or just chat with Darren and his team, the Farwell Group. The number again is 416-863-7501. And do you have these tips for investors available if someone wants you to email them?
I'd be happy to either email them if someone would like to send an email. Our email address is the Farwell Group at scotiawealth.com, or just give a call, and we'd be happy to send them along.
Since I'm a call person, 416-863-7501. Objective, ask your questions, get your answers, and then do what you feel comfortable doing. So thank you, Darren. I look forward to learning more next week.